Hi everyone, and welcome to the 96th episode of Let's Talk About Market. So, if we see the Nifty index today, it was very lackluster, and after the morning gap down, it was just trading in a minor range. But has things changed, and is there a reversal in the Nifty index? So, let's talk about it. And yeah, I think we can discuss what is the setup right now and where are the pockets of opportunity. So let me quickly share my screen, and please let me know once you all are able to see my screen properly. Meanwhile, I'll just open the Nifty chart. Till then someone can please confirm if you all are able to hear me properly and see my screen properly. If someone can just comment in the chat box if you all are able to hear me properly. Okay. Thanks, Akash, for the confirmation. Uh, so yeah, if we see the Nifty index today, so it was down by around 133 points, and I think in that process, ideally I would have expected some more consolidation. Uh, uh, but we have this RMI back to the zero line. So this completes the minimum objective of a pullback. If at all the Nifty index was supposed to see, then kind of that criteria is met. Now, what it does from here will be very, very important to watch. If you all are aware, we spoke about this, that this major resistance zone was taken out with a gap. So this will be the immediate support level in the near term. Okay, and the ultimate support level for the Nifty index will be the 61.8% retracement of the entire rise. Okay, so the 61.8% is a little lower. It is around 25 to 50 levels. That is the sort of level on the downside for the 61.8% retracement. But broadly, if you see 25,450 around is also an important support zone. If at all the Nifty sees a pullback, then okay. Now over here, see, this is a there is a bull versus bear argument over here. Okay, so the bears will say that okay, now the RMI has gone back to the zero line. Now this leaves a scope for a correction and the next leg of down move. But for that, of course, we will need some confirmation, which is like RMI turning down and then giving a sell crossover and so on. And in that process, Nifty index breaking the important support zone that I just mentioned, 25,450 and 25,250. I think if 25,250 is broken on the downside, then all the bullish bets will be off the table, and then there will be risk of a correction in the near term. But until that is held, ideally ideally the expectation will be that it continues to inch higher a bit, and at some point it breaks out from this important resistance zone. And that's where probably an important move can come. Now, why I'm saying that there is still some scope of up move in the near term, it's because the FI's positioning even yesterday, despite being it was a positive day, but we ended up seeing some covering in the FI's positioning, and also the net position has seen very good covering in the last three sessions. All the way from 8 lakh, yeah, 8 lakh 80,000 to 4 lakh 50,000. Just in a matter of 3 to 4 days, is quite meaningful. Now, typically we have seen, at least in the past, that the short covering has happened in the range of 2 lakh 50, 2 lakh 60 to around 2 lakh sort of contracts. So this leaves furthermore room of some upside in the near term, and even in the futures we have seen them going to around minus 1 lakh or minus 95,000 contract sort of levels. So that also leaves some minor room on the upside in the near term. average swing, if we see, daily swing, sorry, daily swing, if we see, it has turned down from around 80 levels. In average swing, there is still some more room left. Also, if you see other diffusion indicators like percentage of stock above RM, with RMI buy, that is also around 68 and turned down a bit. So we need to watch these indicators closely. But like I mentioned, even price wise, so far, there are no signs of a breakdown yet. And like I told you, there can be a bull versus bear argument. So the bulls would say that the RMI had gone to the bearish, had given a bearish crossover, and in this sideways consolidation, it has nearly pulled back. So they would say that when this starts turning around and it gives a bullish signal, that's where maybe we end up seeing the next leg of up move. So that is also a valid argument. But so far, if we look at the price action, it was the lower top, lower bottom formation which was happening, and that seems to be over, and there is a higher high, and now a pullback is happening. So we need to see whether the important support levels are held or no. And for that matter, the important support level for the Nifty index is 25,450 to 25,250 zone. That is because one is that multiple tops were formed around this zone, and the 61.8% retracement of this entire move is at 25,250. So this will be the zone to watch out for in the near term. Apart from that, also watch out for VIX. Again, today India VIX did close on the downside. In fact, during the day it had fallen a lot, but after that it did manage to recover. But the subdued India VIX is also saying that there is a bit of calmness in the market, and generally low VIX is in general good for the market. So yeah, that is how we are placed at this point of time, and we need to see which way things turn around. The other important thing is that watch out for some clue. To get the clue from small and the mid caps, because over here also all of them are hovering around the averages. So what they do over here will kind of help us understand the next move in the Nifty and the other indices. Okay, even if you see 500 and all, they are all trading around the averages. And if we just had to remove this spike, then I can say that we are still not out of the woods, because we are hovering somewhere around this 61.8% zone, right? So something that we need to keep in mind. Apart from that, if you see for the Nifty index, see again some bit of rotation is happening where PSU banks are holding up, and we have seen a meaningful correction in metals and so on. But like I told earlier as well, you will have to see each index individually and take it on its merit, because some sectors like IT has broken down. Despite a sharp fall yesterday, it continued to fall today. Then there is auto, which seems to be, which has given up a bit. PSU and all, if you see, they are broadly above the averages. So, broadly it suggests strength. PSU again, it is trading above the averages. The next signal in PSU actually would come if we end up getting a bullish crossover. Then it would mean that maybe the next leg of up move could be starting. But until then, maybe some correction, consolidation possible. And yeah, oil and gas also, in fact, today also they inched higher. And I'm not sure if there is a falling trend line breakout. No. So they've just ended around the trend line. So again, this can be an interesting, sector to watch out for in the near term. Let me just extend the trend line. So yeah, this will broadly be the resistance level for the oil and gas. So this is the BSC one which I have. I've just put it over here. but you can see that it is somewhere around this important resistance level. What it does over here would be important, but like I told you, I mean, always look out for RRG. It will help you to know the strength of the indices. So again, the ones where the momentum and everything is rising, I think those are the ones that you need to concentrate on in the near term, because like you see over here, right? IT was down earlier, again it has gone down. So the ones basically which are weak might continue to lose momentum at some point. And I mean, that is what we need to watch out for. So PSU Bank also has seen a meaningful dip in momentum. Now we need to see whether it curls back up or it goes into the lagging quadrant. And I think consumer durable reality are the ones which seems to be gaining some sort of momentum. And we need to see. But again, setups like these, which are already into lagging and then turning down, are never a good sign, because it just tells you that there is no strength at all in these kind of index. So media falls into that, but fortunately there are not many stocks in FNO or something in media. So this sector can completely be avoided. But I'm just checking if there are any changes on the weekly RRG that we are seeing. So infra is the one which is turning around, which we discussed yesterday. It is pharma which is trying to turn around. It is IT, oil and gas. Oil and gas is actually gaining momentum. So we had spoken about this yesterday as well. So yeah, I mean, these are the ones that you might want to concentrate. And see, you can also do one thing. I mean, through heat map also, you can try and understand which are the strong and the weak stocks. Just for example, let me just take high to high. Okay. So let me take it from 1st of December, so that we understand which are the ones which have performed well in this sideways phase. Okay. So this is December 1st. So I simply do a custom date, December 1st to current date, and you can see that metals has beaten hands down. Metals, CPSC, commodities, PSC, PSU Bank, energy, oil and gas. So anything and everything above the Nifty 50 have basically outperformed, and everything below that has underperformed. Okay. So this can also give you a sense that who are the underperformers and the outperformers in this sideways consolidation. If at all, I'm thinking that a breakout will happen at some point, then maybe these are the sectors that you would want to concentrate on. And if at all the breakdown happens, then these are the sectors like IT, pharma, consumer durables, FMCG. So if you see, broadly defensives are the one that falls into this category, and then mid cap, small cap, and all those kind of stocks, where some trouble can be there. So this can be another way to identify who are the best performers and who are the underperformers. Again, if you are an FNO trader, simply just do FNO basket, and you can apply the same filters. So these are all cash rate, but you will understand that metals and all are into the outperforming list. In the negative list is Keynes, Syngene, Kalyan Jewelers, KPIT Tech, ITC, and so on. So these are basically your underperformers, and you might want to see if there is any opportunity that is there in these names, for you to form any short positions. So that is how you can do it. So yeah, I think broadly that's I mean, this is what is there to discuss today. I mean, not much, nothing new that we have discussed right now, but just a scan of heat map could be helpful for you to understand the weak and the strong sectors, because I think somewhere over here we are at an important point now. I don't know, I mean, how long will this consolidation happen, because we also need to understand that broadly we have not gone anywhere since June 2025, right? We are almost at the same level. All we have seen is ups and downs. So at some point of time, we need to see a meaningful move. And forget that, but if you see that way, then it is almost from September we have not done anything. So either we break down or we break out. Some point, we should get that trending move. So when do we get that is something that needs to be seen very closely. And I think for that, weekly chart will also be helpful. Firstly, I think today is Wednesday, right? Oh, sorry, today is Thursday. So tomorrow we'll get a weekly close, and we'll need to see if it manages to close about 20 week or no. If it closes about 20 week, then it can give us some hint that maybe bulls are trying to make a comeback. And then the ultimate confirmation will be of a crossover in RMI. If we end up seeing this, then it would mean that something like this, that a new leg is happening, and this can result into the next leg of up move. So all we know that the positioning and all is very bearish by FIIs, but we just need more confirmation on the chart as to what happens. And apart from that, like I told you, there is one trend line that I'll be watching very, very closely, and that would be this. Because the last thing that you would want to see is some kind of broadening top. Broadening top typically happens at the towards the upper end, and it basically means that there is meaningful volatility at the top. But at the same time, buyers are not able to push beyond this upside of the pattern. So this again is kind of bearish. And plus, even in elite wave, it is it kind of means that we are in the last leg. So we need to see what happens, and do we get this move till here? If yes, then are we able to surpass it or no? I mean, these are the things that we need to watch out for very closely in the coming days. Okay. So I think with that, so a perpetual learner, I don't want to talk about elite wave over here. I think I've made it very clear yesterday that please don't mix IC and what we are doing it in strike. So Deepak says, with so much chatter over stock related to nuclear power, data center, AI centric IT companies, is there index that tracks good companies? Or I don't know. Good question, but I don't think so. We have anything of that sort. No, I don't think so. I think with this data center story and everything, what I've read and heard about it is actually the energy companies which are the beneficiary. So, whether AI happens or not happens, I mean, we are a growing economy, and power consumption is generally huge. If data center actually plays out and AI thing plays out, then huge energy will be required. If not, then anyways energy is required, right? So I think in that sense, uh, you know I would say that energy are kind of the safest bet if you want to play the data center story. But apart from that, I think Deepak, real estate is also one, because I read that because of the tax holiday that government has given, many real estate companies are sitting on the land bank. So something like Anantraj actually does is into data center. But I think more and more developers might find it attractive if there is this tax incentives which is actually given. So maybe, I don't know, you can watch out for the commentaries in real estate stocks, whether they are trying to get into this or no. uh, Maybe I think that is the only thing that comes to my mind. Murli Krishna says, give strong and weak shares as per your analysis. So, see, I always try to do something like this. So, one of the easy scans that I try to do is that, So say for example, which are the stocks that are trading above the 50-week exponential average, and I would tend to think that who are trading above the 50 week from basically this candle. Okay, so it is saying 7th, but trading view consider it as uh, start of the week. So let me take it end of the week, so say 11th of April, right? And this, wait 1 minute, yeah. So now you can see there are somewhere around 78 stocks or so. Of course, if you want to fine tune it further, you might just make the list to say, for example, Nifty total market. So now you end up getting, somewhere around 31 result. So these are basically the ones that have not broken the 50 week ever since this up move has happened. Okay. And even that, sorry, what happened? Oh, so actually, with that, wait, I just need to see what happened. There should have been more results. Just let me refresh it and check it. Or I don't know, many of the stocks would have broken in this leg of correction, I think. Okay, so here you go. You have many stocks. So I think if you all recall, we had also spoken about AB Infra, because again I was checking that and we had seen it in the list, and now you're seeing this stock, moving out of this consolidation. And if you all remember, we had spoken about this wedge pattern as well. So sometimes you end up getting such nice moves. So AB Infra, Acutas, Apollo. In fact, I think Apollo tires gave result recently and it was good, and now it is trying to turn around from 40 week. So these are basically the kind of stocks which are holding the 40 week. Okay, in fact, I have done 50 week. So these are the ones that are holding 50 week, and broadly, they are outperforming. So this can be in the your strong stocks ka watch list. Now I may want to do something like this. So say for example, if we take for the Nifty index specifically, okay. So when the stocks are trading below 40-day exponential average, those are generally those are, I mean, that is usually a sign of weakness. So I would want to see that within FNO stocks. Okay, let me take FNO stocks. I'm not sure if we'll get the results, but I'm trying to see from 1st of December which are the ones within FNO stocks that are trading below the 40-day. Okay. Mm, so in this look back period, I will do, sorry, I'll do it from 1st of December. And sorry, I'll do it below. So now you have stocks like these, like Amber, Bajaj Holding. These are all the ones that are trading below the 40-day exponential average. So these are your basically weaker stocks. Okay. Now what you have to try to find is that if the Nifty index, ends up, falling, then you might want to check in these kind of stocks if there are any bearish trades that you can take in, because these are the ones that are basically not breaking above the daily averages. And in fact, if at all we are seeing a pullback, those pullbacks are being sold into, right? So you might want to see what happens in this. But broadly, this is how, if I have to be absolutely sure of strong and weak stocks, this is what I would try and do. I hope that answers your question, Murli. Amit says with MPC meet announcement tomorrow. Oh, MPC meet is there. Oh, sorry, I did not know that. So I would just expect that we need to see this properly. I mean, as to what is happening over here, right? Whether Nifty 25,250, that is like an ultimate cutoff on for the for the bulls. So if this 25 to 50 breaks on the downside, that means that we are possibly going to the lower end of the range. And then once we come towards the lower end of the range, there will always be that worry whether the lower range will be support. We will take the support or no. But 25 to 50, that is like an ultimate support level for the Nifty index. Okay. uh, uh, if that breaks on the downside, then I mean, you just have to be prepared that again there is a risk of a correction towards this 25 450, 25 300 kind of zone, and then the risk will built in. In fact, if we end up now breaking below this, then there will be those fears of can this lead to a larger correction or no? Because actually, see, over here there was this spike. If we just remove that spike, then on the line chart it might start looking like an HNS pattern that is developing. So I know you should not be talking about that because we had seen this high, but if I just have to exclude that, because this technically was there only for 5-10 minutes, right? This price action that was there. Broadly, Nifty was just trading around 25,800 or so on that day, or in fact lower than that. So, I'm just starting to wonder, can this become like this? But of course, those bearish thoughts will start coming to my mind if 25 250 breaks on the downside. But as I told earlier as well, you need price action to confirm. So let the price action let us get some confirmation on the price action, and then we'll take it from there. No, Murli, you can just log into Strike and do the process that I've done. I'm sure you should be able to get it. Jeet says, can you please help me with top-down approach of shortlisting? So, Jeet, it is actually a big process. For that, we have already done a webinar, because it might take almost 30 to 40 minutes for me to explain you. But the broader idea is that in a top-down approach, what you might want to find is that first, what Nifty is actually doing. Okay, so for that you will have to go to sentiment indicators and figure out what the Nifty index is going to do. Once you figure out if Nifty index is going to do well or is going to do bad, then you can either use heat map or RRG. Okay, it is or, please note, because both of them tries to show relative performance in their own way. In heat map, it is basically absolute price action. In RRG, it is the ratio chart based on which you try to figure out whether it's an outperformance or no. So these are two different methods. So it depends whatever you want to see. Either of them are good. Broadly, they will give you that same result, but it's just that RRG is visually much more appealing, and you can figure out things a bit more quickly through RRG. And the last one is that RMI setup. So what is the RMI setup that you would want if you are taking a bullish trade? Which means prices should be above the daily averages, and there should be a bullish crossover. So these are ideal, uh, points where you would want to take a bullish trade. And if the markets are bearish, then you might want to find which are the stocks which are trading below the averages, and then they are giving a bearish crossover, right? So that is how you can check it. Jeet says, can you? Okay, sure. I will just give you the link. So in the YouTube, you can just go to Strike IC or Strike Money. You can type. Just go to live over here, and in this search, top down approach, just write it this, and you will see multiple webinars, based on this top down approach that we have made. Just go through them. So wait, let me, if you wanted a link specifically, I'll just post it over here. Okay, I hope that helps, Jeet. So yeah, I think it's 5:30 now, and I've tried to answer all your queries. We'll see. I mean, tomorrow is the weekly close, so we'll see how do we close for the week, and whether those important weekly averages are broken on the upside or no. We'll watch out for that tomorrow. Okay. So till then, goodbye, and see you all tomorrow at 5 p.m.